Well, welcome back, everyone. And boy, was it an amazing afternoon. We've had some power-packed sessions, and I think we're ending with a bang right now because we're ready to start our third session and our final session for today, where we're talking about tax implications on the jointly owned properties. Before we head on into the discussion, I want to introduce the panel to you quickly. We have with us Mr. Kanagaraj Gurusamy, the Director of Owners Affairs. Also joining the discussion is Mr. Dinuka Perera, who is an industry expert. And we also have with us Mr. Ankur Jain, who is the Director of MMJS Consulting. And moderating the session for us this afternoon is Mr. Garry, the Managing Director of Head of Owners Association Manager of Core. So viewers, please note that you can post in your questions in the chat box and our panel will address them during the course of the discussion. And we do have an event feed where we can take the discussion out there post the session. So over to you, Mr. Garry.
Thanks. Hello, everybody. Yeah, so we'll get right into this great conversation at what, 4 o'clock, half 4 on a Thursday, to talk about VAT. But we've got some great experts here. I believe we've got, obviously myself, I'm from the independent sort of the scene of the Owners Association. KG's from major developer background. And then we've obviously got the auditors and the consultants. I don't know if you guys just want to introduce yourself just briefly in case nobody knows who you are. And then we'll get into some of the questions. I'll throw it to Ankur first to introduce himself.
Yeah. Hi, good afternoon, everyone. My name is Ankur Jain. I'm director with MMJS Consulting. I'm providing VAT advice from last 13 years and would be happy to give my perspective to a lot of VAT issues the industry is facing.
Great, thanks. What about yourself, Dinuka?
Hi, everybody. Good afternoon. I'm the associate partner, Santa Fe Internationals. We are chartered accountants. I've been into the service charge industry for 11 years. I've been conducting different sessions on the audit and assurance, service charge allocation, and value-added tax. So I'm happy to be here to some thoughtful discussion.
Excellent, thanks. And yourself, KG?
Kanagaraj Gurusamy, shortened KG. I've been there 17 plus years experience in terms of community management, especially in the Dubai base. And I do work with a lot of tax consultants, including Ankur, Dinuka, everybody. And, we work with the different type of communities, as well as we, the challenge or the process that we've gone through from start to end, whole process of a tax implication, so that I may able to add some values to the industry people.
Excellent. Thanks very much, guys. And I think that's sort of the theme we're going for. We're going to try and take it from the start, from when it was introduced to maybe the future and everything in between, and hopefully use your guys' experience for that sort of thing. So I'll start. I presume if I do it in order, then we'll need to go to Ankur for the consultancy part, because you would have started perhaps before everybody else would have been trying to advise companies and get them together. And I believe the sort of a first question I'd like to ask is, what are the major challenges that were faced on the initial subscription to VAT from your point, and then I'll move across to the other guys, because obviously this is a part of the world, or the GCC was a part of the world that doesn't tax. This was brand new, so it was a big challenge for everybody, including the people that were trying to implement it. So when you go.
Yeah, thanks, Gary. A very important question, because as you know, from 1st of January 2018, when VAT was introduced, there was a big question, typically, that who should register, whether it is an owners association who should register, or it is the community management companies who should register. There was no clarity by the FTA, the Federal Tax Authority at that time, that who should register. There was a confusion which was going on. Finally, the more and more inquiries which went in, and in the real estate guide, it was finally clarified that it is an owner association, though they don't have a legal status, they need to register. We can, I'll just take you that what has happened afterwards. Nowadays, the things have changed. But in 2018, this was the mandate that owners association has to register. The community management, they are the second leg in the transaction, but owners association has to register. So this is what the mandate there. not clear fully, but this was the mandate which was given, and a lot of owners association has to register at that time. And this was a big question at that time, whether this is the right approach or not, because this is what, maybe industry was not following at that time, but everybody has to register at time so that, the late registration penalties are not applicable. And we have seen that a lot of owners association getting registered at that time. And, post that, the FTA during audits and all those things do check this thing. So, initially, as I can say that, when the VAT come in, this confusion was there, that who should register, and it was finally ended with FTA taking a view that owners association has to register, and community management should be in the second leg. I'll pass maybe Garry, the things have changed now, which I will definitely talk more in terms of what has happened now, but this is what had started during 2018.
Yeah, and I think that was one of the the sort of a second phase of that question would be a circular got issued after that. Yeah, the circular got issued that sort of changed that that mantra of who registers for it. Now, before I pass over to Dinuka, KG, you worked for a major developer at that time, so I think the trend at that stage anyway was that you guys put it all under one TRN. Would I be correct in saying that? That seemed to be what was going on in the market at that time. The sort of the bigger managers or the bigger developer-backed managers were all under one TRN anyway, whereas the independents like myself had 20, 30, 40 TRNs for different projects.
Yeah, true. What happened in the initial stages when the law was implemented, every association management companies follow different direction. There's no clarity, so some of them gone through registering communities under their name. Some of them, majority have gone through register each communities independently. So the independent TRN were registered, applied, tax were filed, and later the clarity has been provided. So now there is a transition people are going through. So you can see phase one, there is a registering independently, some of the registering their company, it's mismatch. Now clarity has come, everybody is going through to deregistration process and applying, converting that all the communities into their own TRN number, single TRN number process, etc. If you look at phase one, phase two, phase three, the third phase is the very challenging phase where every company have to do the deregistration. So the challenge becomes administrative process become a quite challenge for the management companies, because they have to do the whole deregistration process for the every single associations they registered separately. Then they have to apply through their own TRN. That's a complete change process happening currently. That's what I can say.
Excellent. And what do you feel, Dinuka, on this? How are you handling it from the auditing side?
I mean, I agree with KG that it has been very challenging for an association management company. Now, I would like to take you to the different angle where the compliance side of it. Previously, the association had their own TRN number, and the risk was limited to their own association level. They were managing the independently VAT records. Now, things have changed, and the risk has moved towards the association management. We are now have to make sure every single transaction routed through from the association is monitored and accounted for. I mean, compliance with the VAT laws and regulation. Now, as far as the deregistration is concerned, that's one of the horrendous job recently. I mean, it takes longer time, and the penalty, 10,000 penalty, is unavoidable, because the FTA guidelines required the association management companies to deregister the TRN from 2019 November, when the new jointly owned law was implemented. I mean, new jointly owned law was implemented in September 2019. And at the time of the circular was issued, we were already late to deregister, because there was a lot of discussion happening in the market, and people were running to RERA and the FTA. And I know I worked with KG at that time, and we were in confusion whether to deregister or not. So now there are a lot of questions whether who's going to pay this 10,000 fines, and I know there are many companies receive 10,000 fine. And now and how
so there's a good question. Who is paying the fines?
So, I mean, that's obviously that's something we need to take up with the regulator, and we need to discuss about this whole process, you know. So,
but from an auditing point of view, because all
Yeah.
the service charge now goes through escrow accounts and through
Yeah.
audits and all this stuff.
Yeah.
You must be seeing that now in budget reviews.
Yeah.
People must be putting line items in for fines,
Yeah.
because that's what it
Now,
is.
you know,
right?
no,
Otherwise, you're not going to
getting
get it released.
getting approve the penalty is not easy task, you know. To pay the penalties, it's not very, you know, encouraging thing, you know. I haven't seen people, because I can see like a lot of people started very recently to deregister. Still some of the, you know, the process is ongoing, and you know, people haven't even received the penalty so far. But another challenge would be about the now the claim of the taxes. Now the management companies, being the responsibility party, they have to be very sure that, you know, all the invoices are received under the management company's TRN number. But as far as utilities and master committees are concerned, these are one of the major items on the budget where the management companies face challenge to get the invoices under the management company's TRN number. So these are sort of challenge. Now then again, you will have a VAT refund. Now again, the challenge is that how to get the VAT refund. You know, now it's another burden on the management company now to apply the VAT refund before the canceling the, you know, the TRN number. So that requires a separate audit, you know, sort of the FTA will conduct a small audit to release you the refund. So there will be a lot of challenges where there is no funds. Let's say one association does not have funds to pay the tax liability, but the now liability is on the management company to settle the, you know. So these sort of challenges you will see. I mean, I've seen people, you know, having these issues already, but it will keep adding to you until you streamline the process, and, you know, hopefully by next year, I think.
So if I just jump in there, right, there's obviously people advising the regulatory bodies, I presume, and listening, and somebody should be listening to these voices. Now we've got on this chat alone, we've got the independent developer, consultant, and an auditor. Like all of us have voices, but it seems to be that it's still up in the air 2 years down the line, and there's no clear clarity. So that's going to be a concern for people watching, because if you're, like you just rightly said, if you're managing a dozen associations and one of them struggling for funds, which happens, sometimes they struggle for funds, and to be honest, that's the owner's liability. It's not the management company. It's their asset. Is there cases where people are paying from other accounts because they're liable? I mean, like how are you guys seeing this? Because it seems to be a little bit open-ended at the minute.
Yeah, obviously, when you file now, if you, let's say you manage 10 owners, the JoPs, and there will be a VAT refund and VAT payable situation at the end of the, you know, the tax period. So obviously, the people who have a tax refund, they are offsetting the tax liability. So that reconciliation is, you know, to be done end of every tax period, and, you know, pay back to the JoP, you know, which had a tax refund. So all this additional work, I mean, you need to make sure like you conduct. Otherwise, at the end of the year end, you will have a lot of difficulty, you know, reconciling these balances. And probably being the auditor, we need to highlight these facts in the audit report. It's not good for the management company. So
well, I think if I was like, I've ran 2 different away companies now, right? And the concern's not necessarily doing the work, but we're living in a market now where management fees are getting cut in half. We've got service charges getting reduced by whatever %, but the actual risk and liability, particularly on this tax issue, right? Because you can get into trouble. I'm from the UK. I used to work at the tax office. It's you can get into trouble very quickly. We've got guys like yourself as the auditor. We've got guys like Ankur as the consultant. Are you finding more and more companies are trying to engage third parties to do this work and put it onto the service charge budget?
So from a VAT perspective, you know, as what Dinuka has said, that, you know, we have seen a trend. The FTA is becoming very, very, you know, in terms of aggressive. We have also seen that a lot more audits has happening as compared to the, you know, previous year. And one of the things which we are understanding, that they want everyone, including the JoPs, to to follow the rules as set up as per the VAT laws and regulations. So therefore the compliance burden definitely increases. Once the compliance burden increases, definitely there is a lot more work which you have to do as compared to what earlier you used to do. Earlier, the responsibility was on the OAs, but then the mandate to do everything by the management company definitely increases the cost, and which this increase of compliance and increase of the authorities to review the things, definitely I can see going forward also this trend will continue, and there will be a lot more these things. You must be knowing that 2018 was the tax period when the FTA introduced VAT. So by 2023, this is the 5-year term where the period of limitation kicks in. So most of the audit for the 2018 period has to be completed by 2023. So we are seeing that there are a lot more audit which will happen. So therefore, what we can foresee is that the requirement of getting your details what you are preparing being reviewed by a third party or internally by somebody else. There should be a maker checker concept and all those things, because VAT is something, if you manage it properly, it is not an issue. But if you don't manage it properly, definitely there are a lot more issues. There are a lot bigger administrative penalties which are there, and it definitely, if it comes in, it definitely make a imbalance to the work which you are doing and the the payment which unnecessary you have to do to the authorities.
So I'm interested, KG. Thanks, Ankur. KG, you're from an operational background. You're from running these associations. Now and you've been heavily involved in events, training, and all this stuff over the years. Now we've always been informed that our job's to get the experts to manage to provide the experts to the association, to the project, whether that was an expert in facade, an expert in health and safety, an expert in you name it. We get those people to the project. I'm interested in your opinion with tax and VAT, not just be another expert we need to engage.
Yeah, that I could see that compliance and compliance related the process and administration fee is one of the things that is involved in this process when you do tax audit and tax return filing, and as well as that other administrative process involved in correlation to this process also is one of the factors that the management companies have to consider and go through. In addition to what Dinuka and Ankur said, that in management companies, there is a bigger part, a role to play in terms of processing those timely basis. For example, pay to the FTA, claim back from that each and every association back to those process also very tidy process that the large volume of the management management companies managing large volume of projects, and they may have to go through the things. And the tax, yes, the tax once rise, and there is a impact on the survey charge as well. Yes, we all know that the 5%. But what the management companies working with the authorities, they're trying to balance it. Try to control that survey charge, not allowed to increase, and maintain in consideration with that existing that what the administrative process that they have to follow it. So there's some sort of challenge. Yes, there's the definite challenges, and there are certain guidelines, support from regulatory bodies also helping the management companies somehow balance it out, or somehow reduce certain areas, somehow to manage those things. But yes, the major challenge would be the cash flow impact, is either both from management company side or the management side. So that has got some of the impact on the management companies. Yes, VAT, the 5% is one impact, and also managing or controlling the expenses or reducing the service charge another impact, and also that the cash flows another things. These are the three challenges in terms of managing managing communities that every management companies have to go through. And yes, there's a really challenging period, because it's implemented. Everyone has to go through the process, understand and understanding the risk, understanding the challenge, understanding the compliances, and how to manage the entire process or journey is one of the real challenges. In addition to keep the service charges control. That's another part. So these are the four areas are challenges. Yes.
Excellent, KG. So if we were going to try and sort of give your best advice, so if you're going to give your advice to somebody that's now operating in the field, because not everybody's got a team of accountants behind them, not everybody's got a huge admin team behind them. That's your beauty of owners association. What is your best advice to somebody now for their projects? What would be a sort of a checklist of what to do?
My advice would be, work with your internal resources carefully, because the internal resources must know 100% about that VAT compliance. That's very, very important. But the internal resources, along with experts like Ankur or Dinuka, those are the teams, would really helping to manage this entire process. So in my recommendation would be to the people, get that qualified consultant with you, and along with your accounting or accounting teams together. I think that's a process. Make that in the process, streamlined process will help every management companies to achieve that. Achieve the whole process. Maker, checker, somebody verified already from the consultant side, so that your whole accounting process it's compliance with FTA regulations. That's what the recommendation I would bring it to the table.
What about yourself, Ankur? I mean, you from a consultant side, what if I phoned you up tomorrow and said I need to meet you on Sunday? What's the sort of first point of advice you're going to give me?
Absolutely. Just to take from what KG has said, that compliance to the VAT laws and regulations are of utmost importance, and this is what every business has to do. Every management company has to take care of that. You cannot take it lightly. This is what the most important thing, because if you see the hindsight is that if you take this lightly, and the penalties which are there under VAT regime are so severe. So one is you have a reputation risk. Other is you have a cash flow risk. You have to make payment to the authorities if you do anything which is wrong. So definitely, you should have a process. We are not saying that you go through a consultant, but you should have a process which is a maker checker concept. Somebody should prepare, somebody who knows the VAT law. Why I'm telling you, VAT law is a law, taxation laws they keep on changing. There are a lot of amendments, lot of guides, lot of regulations, everything keeps on. So those who understand the laws, you keep on checking with them so that you get it right. Because we have seen that people in the industry, though they thought that this is correct, but as per the VAT law, it was not correct. So therefore, it is important that you get it right. There should be a maker checker concept, either internally or from outside consultant. You review what you are doing. One of the things which we have seen a lot of businesses doing is a health check sort of thing, that what currently you have done from January 2018 till date. The VAT laws has evolved. There are 20 plus user guide, 20 plus clarification which have been issued. So it is important that somebody, a professional person, advise to you or sees what you have been doing. And if there are any mistake, there is no worry. There is a new cabinet resolution which have been issued by the FTA, where they have reduced the penalties drastically. So even in case you have got anything which is wrong, you can make a very nominal amount of fines and penalty, and you can come out of it. But for that, you have to voluntarily disclose those errors. This is very, very important. You cannot wait for the authorities to come and check, because if authorities come and check, the fines and penalty would be much more as compared to you go and voluntarily disclose this. So, we have seen this, as, Dinuka was also saying, that still there are a lot of ways they don't know regarding the deregistration process. This is taking a lot of time because they have not acted on time, and there are a lot more OAs who are getting these deregistration penalties. So there is a way also to handle at that time. If people would have acted at that time when the new JoP law would have come, people like there are a lot KG and a lot of other companies, they were able to save that late registration penalties, late deregistration penalties. But then those who have not acted, now they are paying unnecessarily these 10,000 fines for late deregistration.
Awesome. I'm going to tweak that question a little bit for you, Dinuka, if that's okay.
Yeah.
So I think the guys have spoke pretty well there, but in terms of if somebody was operating, it's a bit of a mix between closing the TRNs. What if you're a management company that's taken over a project from another management company, and that management company hasn't deregistered the TRN?
Yeah.
And you're sort of in limbo. So what have you seen that? Is
Yeah, that's very common. That's very common.
Yeah.
This is actually this time period. It happens very, very commonly. I have seen a few actually cases where the ex-management company was using the TRN number, and now new management company having the problem. I mean, that's where you need to draw a line as a new management company and to decide what is the responsibility of the ex-management company, what is my responsibility. So because the authorized person from the TRN numbers was from the former management company. When you take over the building, obviously you can't take the building with the liabilities. So you need to make sure you draw a line and you should deregister the, because the deregistration would have been done during the period when the former management, was in.
But what about when the management company hasn't audited, hasn't done anything, not engaging with you? I mean, like, and what basis does the new management company come in and start going, right, I'm deregistering that, we're now in charge? How does that work, right?
I mean,
we all know we work in this sort of a bureaucratic minefield, right? So let's see how it works.
That's where normally, when you take over the building, you conduct the handover audit. Generally you conduct the handover audit. So normally auditor points out what are the contingent, liabilities in the financial statements. What are the possible penalties, the new management company will face. That sort of, when we put these notes into the financial, it sort of protects the new management company, So that's the auditor's job. I mean, this is our job, is to point out these, the potential penalties, or we call it contingent liabilities. So we mentioned.
So a handover audit.
Yeah.
A handover audit should draw a line, and then you can take it from there. Yeah. Now, is there any further changes coming that you guys know about? This is maybe more directed to Dinuka and Ankur. Maybe there's something you can help guys like myself and guys like KG to future-proof our organization, or something we should start prepping for now. Is there anything in the pipeline that you know about?
So, Garry, what we have seen is one of the things, as Dinuka also said, that the point which is very, very important for all of us going forward is to ensure that we are fully compliant. And to be fully compliant, what you need to do is the invoices which you are issuing and the invoices which you are receiving. Okay, the input invoices are all compliant. We have seen a lot of issues there. And, these are something where if you don't get it right at the time of audits and all those things, the FT will just simply reject it. So these are some of the things which we need to get it right. Because if you have, say, for example, you registered your management company, but then input invoices are in the name of master developer, these are something where just you are losing money on it. You should act on it. You should ensure some work has been done, or there are certain things where you go to the authorities, which is known as you file a clarification, or go for an explain the situation to them, that this is what situation which is there. We have seen, in 2018-19, that all those things in the real estate sector also was happening. You go and file a clarification to the authorities, explain your situation, that this is why I'm not able to claim the credit. Please give me your view on that. So which will crystal clear your doubts on these issues, because these are some of the gray areas where industry may be taking a stand, but then what industry is taking the stand may not be 100% correct. So in those scenarios, you identify those issues, go to the authorities, file a clarification and get the clarity, because these are the things which is very, very important, which I can say. And one thing from a future point of view, I can say is, what I'm seeing is that there are chances that a lot more audits or sort inspections or survey will happen. It has been happening with many of the other sectors, so we can foresee that in this sector also, some of the major player can expect that the auditors knocking the door. So for that, you should prepare in advance. You cannot, because normally they only give 5 days time to provide the details, and within those 5 days time, if you are not able to provide the details, definitely it will give an idea to the authorities that you are not fully prepared. So this is something which you should prepare, that if you should eventually prepare that if the auditor comes to your doorstep, you are ready, and all the invoices, all the documents are proper, and so that if audit happens, you come clean out of it.
Excellent.
So
The same thing, Dinuka, yeah, because you're the guy that's going to be auditing these.
Yeah.
So
No, I mean, now being a management company, I mean, what they should be ready about. I mean, he talks about the FTA point of view. I mean, in terms of operation, what you should look at your transaction. Now there are some transaction like a management fees and in reimbursements. You used to do some reimbursement, cost to the association because you were using 2 TRA numbers. Now you need to relook at your transaction, and probably now with the new setup with the management under the management company, you are not charging on your management fees, so you cannot charge the VAT on yourself, so management fees, exempted, and if you are reimbursing some cost from the association which you have incurred on behalf of them, now there is no requirement of charging the VAT. I mean, by mistake you can charge a VAT, it's sort of now non-compliance, That's where operationally you need to list down all the transaction. You need to look at your and you need to say that, oh, now we are here and we should not do these things. So again,
so to enlighten us, right? Say we get our 5 days notice is what was just shared a minute ago, right? What should we there might be people here that aren't involved in this who maybe don't know what this is. What sort of things are you thinking needs to be prepared? Are we talking invoices, server supports, contracts, LPOs, everything sort of filed correctly and contracted correctly? Is this what we're talking?
Yeah, I mean, in terms of the tax, you need to keep your source documents for the filing of tax, which is your invoices, the contracts, and the bank statements, your financial statements. So you should have a proper reconciliation. And generally we know you have a proper books of accounts. You conduct the audit every year. So the audit should be reconciled to your VAT returns. Basically, if the financial statement, if you look at the financial statements, there is a, let's say, service charge 1 million. So and end of the one financial year, so this 1 million should be reconciled with my VAT returns. So if it's not, I should have a reconciliation why it's not. So now you are looking at a consolidated level, VAT return, like you will have your own management company tax data and you have individual JoP's VAT data. So you combine all of them and you file. Now you need to have this master reconciliation. If FTA wants to conduct a tax audit, so you are ready and you say this is our records. I'm sure. I mean, this is very. I mean, we know the service charge and it's very, it's clear to us, what invoices we are getting and what invoices are we issuing. It's just the matter of we keep the records in a proper manner.
Good administration. Yeah, that's basically what it
Correct.
is. I mean, obviously we've got some questions that we spoke about, and there's a couple of questions coming in on the chat that I'll get to, but just maybe throw this one out to KG because I think it's a bit more operational or on the ground. Like, obviously we know, and I think there was a hot conversation about this a session or two ago, that we know that as managers we've been mandated to reduce service charge, reduce, control. Everything needs to be held down. The last sort of 2 years have been like that, which is when they introduced the VAT came in. So you're from your point of view, what trend did you see? Did you have to offset to try and because you're adding 5% really, right? So you need to try and offset that somewhere or do something, because even if you save 5%, your number's not going to move, So how did you find that?
I've seen that mismatch. What happened? There are certain places the trends have been increasing. There are certain places that's reduced. Where you can see that a large volume of the contracts can be renegotiated, try to bring them to certain extents. That helps you to reduce certain areas. Certain operational administrative activities which something you additionally budgeted has been cut down. So basically your contingency or improvements, those kind of things areas been reduced. But the matter of fact is that yes, that 5% increase is increased. So what happened? There's a trends that we can see that there are places where they cut down with the aim that they will be reducing the service charges. But what happened in the end of the year? they may not be able to succeed at. So utility is one other part, say some sort of contracts on another part, because the contracts were running middle of the year, then they're trying to negotiate, reduce the cost, but which they couldn't do that. In that cases, you can see slight difference as well. And overall, we would say that a trend to reduce is happening currently, but there are certain areas where that's also allowing to deficit to happen, to increasing other side as well. So you can say there are places reducing, yes, the trends, there are certain places slightly increase also happen. That's what I could say. But what happened, the authorities are heavily involving, the regulators bodies are very closely monitoring, as in the experts who's speaking with us also, they work with us and helping the service charge combination to be very well controlled manner. So they also, sharing their experience, working with multiple, organizations where they have done the better or best practices, where they're sharing certain informations with other management companies, helping them to keep the service charges very much under control. But trend wise, you can say always no, it's some of the areas reducing, some of the areas slightly increasing, but overall it's the same. That's what I can say.
I got a good question here that's come in on the chat that I'm going to ask you guys. This might open up a debate.
Yes.
Does the panel believe that the current VAT structure for owners association is the most suitable? Which alternative should be considered? So that's who wants to put their hand up for that?
I mean, okay, I can start the answering the question. So obviously Ankur and KG, can join. I mean, the in operational perspective, we may not like the structure. I mean, as far as the owners association management concerned, but after implementation of the new jointly owned property law, all the responsibility of the association is transferred to the management company. Now, as for the FTA, so the person who supplies the service charge is a management company. So there is no role of the association. What FTA look at is a control. Who has a control? So currently there's no control on that. So there is no interim board or, the owners association in Dubai. So basically the control has moved from the interim boards. We used to call it interim, association board, to the management company. And we are not taking any approval, or they don't exercise any approval. There's no control. That's what FTA look at, for you to have whether, even if it is a legal, non-legal entity, they look at where the control exists. So the current, as per the new law, the control has moved to the management company. So that's where the FTA look at, that's why this whole change happened. So maybe operationally and the risk point of view, so this may not be the very, optimal solution for the management company, because considering their fees and, so they have.
Well, this is where I was going to jump in there, right?
Yeah.
Because you're right. Everything you said there was right.
Yeah.
But does the management company have control, or does he just have the liability?
Because it says in the law that the responsibility of the association is transferred. If you look at, I think, Article 49.
Can the management company approve the service charge? He can. There's an auditor in between. There's a service charge review, there's an auditor, and it goes to RERA. So in terms of control, the actual control lies within the government anyway. It actually lies more with the auditor than what it does with us. All we do is we provide you information, and then you present it to RERA. The management company doesn't have control. The management company has liability.
Yeah.
No, Gary, just to add one perspective here is that, you see from an FTA perspective, managing 1,000 or 10,000 odd owners association vis-a-vis, 1,000 odd management companies. So this becomes very easy for them. So they, from a tax perspective, that from an authority perspective, they want to see that rather than managing 10,000 of OAs to 1,000 of the, management company, it becomes easier for them. They can reach out to them. They can, they can structure it easily to manage the VAT law. So this is what I think the intention was. I completely agree with Dinuka that this may not be the optimum process or structure, but then if you see from the authorities' perspective, they wanted to keep it very simple for them, first to audit, to manage, to collect. So all those things became easy for them. So this is the way, that's the reason why this the law has been introduced and the responsibility shifted to the management companies.
Good point, fair point, I'll accept that. That was a good way of putting it. You get anything to add, KG, onto that bit before I ask the next question?
But actually, adding to Ankur and Dinuka, but the structure is already there. But what happened? Management companies, they're not approaching that proper advisor in terms of the tax perspective, right? Because it's newly introduced. And everybody's interpretation is totally different because we are management companies, we are managers, we are not a tax consultants. Okay, so if they could have appointed or engaged them in the right time in advance, so they could have a proper structure they could have created and or educated the management companies, they would have followed. So the challenge here is there that every management company started to think, react later stages where we already consumed over a period of 1 year or 2 years. There are so many things when you engage them. When I engage many of them during my tenure, and when I'm working with them, I came to know various things that we are unaware of it because our interpretation is totally different. So I do sometimes debate with them as well, and they try to come and explain in terms of that perspective. Then my understanding will be totally different. So what my advice would be, the structure is already there. They make it very simple. If it's changing from owners association to the management company, that's a different thing. But structures remain same. The taxes remain same. But what we need to do, we need to engage the right qualified professional to guide us, helping us to ensure that our within the management company, the proper structure has been put in place, adapted, where there is the clarity required, the clarity has been filed. That's what Ankur and Dinuka was saying, where clarity has been presented to the authorities and get their opinions, and you'll be safe. But what happened? We don't know where to reach, we don't know where to ask, and we are not engaging them on time. So over the period of time, we consume more timing. That's where the challenge that's every management companies, and facing the current challenges. So my opinion would be the auditing and tax consultant has to be appointed at the right time, and proper thorough review of the process and controls and the compliance where we have it already reviewed and checked. And that gives more comfort for the management companies to making sure that the JoP and the tax related implications are managed well. That's my opinion.
Awesome, KG, thanks. And there's another question from the viewing audience. It says that most of the owners association / owners committees are not legal entities, as we know. The onus of the comment says the onus of VAT lies with the developer, since the community manager does not share responsibility in this case. Shouldn't OAM be made responsible for it? I think the question there is, I think you've maybe answered that during the course of it, of where the responsibility lies. That there is certain instances where it will still maybe be with the master developer or the main developer, particularly if it is master community fees or utilities, because inevitably these utilities are still in the developer's name. Does anybody get anything to add to that, just to close that question off?
Yeah, so Garry, this was the initially this was the confusion whether the owners association should register for VAT or not, because they are not a legal entity. But then in 2018 the FTA was of the view that owners association has to register, and that's why lot of owners association got registered. And definitely these were the issues, because there were a lot of those invoices which was coming in the name of either the master developer or the subcontractor who was doing the construction, all those things. So these were the issues. But then the point is, I just take the point which KG has said, that because all those things, these were the gray areas, and there was a time where you could have reached to the authorities, explain them that that these were the services which were required by us, but due to certain issues at the time when the project started and all those things, the invoices are not at our name, and we are following the process to change the name. So these are one of the example which I'm saying. And I understand that FTA, when we deal with them, they understand the business problem. They understand that there can be certain things which is because of the process which is being followed, it is not being done. And if you explain it to them, they will understand and they will give you the due credit and all those things. But then now what has happened is all those things have changed. Now, Owners Association, the FT has come, the new JoP law has come, everything now have been shifted to the management company, and they have to now do the compliance. But then the point again comes to the same thing, that they need to ensure that if there are invoices which not in their name, they have reached to the respective authorities to make a claim and say that what is the process to correct that. That's the way to do it, rather than just not doing anything. We will suggest that take action, go to the relevant people, relevant authorities, and get it corrected.
Awesome. I've got I'm just checking the chat to see if anything else going. I've got one last question. I think we've only got maybe 5-10 minutes left. I'm not sure. Just check my time there. So maybe if you guys have any stories or anything you've been involved in, without naming names, obviously keep your confidentiality, that could maybe tell people the sort of rebates you could actually get in case people didn't know, or perhaps punishments you might actually get if you don't know as well, because it's one of those things that sometimes if it's not if you're not comfortable with it, you just put your head in the sand and you don't think about it. But perhaps if we can just get maybe a couple of stories from you guys to see why this is so important, either from a rebate side or from a punitive side.
Yeah, I'll just go with one of the things which has happened with one of our clients recently. So as we all know that, this with the introduction of the new JoP laws, that OAs needs to deregister. And there was a lot of confusion in terms of what is the date when they need to deregister. And, there was a clarification also which the FTAs released later on. But at that time, there was no such clarity. What is the exact date when you should, deregister, whether it is November, whether it is December, or you need to add, because there was 6-month grace period, which was also given. So whether it is June 2020 when you need to deregister. So what we did, because since this confusion was there, we filed a clarification to the authorities, to the FTA authorities, to ask what is the date. And, FTA came back and gave that the date should be this thing. What we have done is we have already, the client has already missed the deadline of December. Okay. Once the clarification came in, we just say that we have received the confirmation from the authorities now. We took 20 days from the date of clarification and start deregistering all the OAs. And in most of the cases, the deregistration penalty was not levied, because we said that the authorities have clarified us now. Therefore, this is the date when we knew this, and the deregistration penalties, most of the cases were not there. So this is something which we have seen, that on a case-to-case basis, the way how you approach it to authorities, it may save you, and you have to act on time. So this we have seen in one of our client case where we were able to save the deregistration penalties for them in most of the ways.
If you want,
what would a penalty be roughly?
It was 10,000 dirham per way. Yeah.
Per away. So if you had 20 buildings, it was 200 grand.
Yes.
There are instances, where the transition were happening between that, one management companies to another management companies. That's where a lot of liabilities transfer between the management company, another management company is happening, and that's where required the professional advice from the experts to be appointed. And there are two things to look into that one. One is the financial aspects and the liabilities of what currently we have it, what futures will come up. That's two things, and also the VAT perspective. I think the most of the management companies, that's where we messed up. I think that's one of the very valuable point to be considered. That's one thing. Second thing, in terms of speaking to authorities, possible try to include certain requirements where FTA needed to add it on the invoices, so that they can claim the VAT without going through those challenges. That's one step that management companies can consider. They have to speak to the authorities, either DEVA or Empower or whatever authorities, and try to explain to them there is a way around to fulfill the requirements. That's one thing that based on the experience in everybody's can follow. That's one thing. One of the challenges that I've faced. We've spoken to them, and there is a way to include it. The other way they can do, if they can manage the relationship with the developer or whoever the names in the invoice, utility provider invoice, possible they can claim it, and and the developer can invoice to the association also can be considered, but it's very extreme cases. There are cases that has been considered. So the invoice on the developer name, we give an invoice developer to claim the VAT, and they invoice the association so that the VAT implications from associations will be reduced. That's very rare cases, but the best scenario is that speaking to the authority and change the name. That's one of the things can be considered from my perspective.
Yeah, and also during the deregistration process, one of the factors we should keep it in mind to update our bank accounts. Originally we have updated our bank accounts as per our all service charge bank account, or we call it designated service charge bank account. But later 2020 we opened regulated bank accounts. So I think before you proceed with the deregistration, I think it's better you update your bank accounts in the system, or otherwise you will have to prove that this is your new bank account, and at the time of you want to claim a refund. So this one of the fact you can note down. And also about applying the reconsideration for the penalties. So I mean, now the people who apply lately and they got a penalty of 10,000. Now when you want to apply for the reconsideration, we have to be very careful about what we are requesting and what are the grounds. So I think we should avoid a lot of jargons writing the letters, and sort of including a lot of section of the law to FTA, I mean, which is a regulator. And I think we should write the fact in terms of the the non-profit concept, and then the service charge, probably asking the FTA to consider and waive off the penalties. So the tone of our language in the letter is also very important. Sometimes maybe the fact is correct, but our tone is a different. Probably we miss the chance of getting the refund of the penalty. So
that's a problem in my life a lot. The tone is different to the
to what
I was trying to do.
To the
intent was pure, but it came across very Glaswegian, and that was a problem. So yeah. So from, because I think we're getting into the last couple of minutes.
Yeah.
From, in case people aren't aware, is there a contact point at RERA that we can? I know we've got the FTA for FTA, but from our side we always go to the regulator. Is there somebody there we speak to, because we all know who these guys are, or is it just a general response into the land department? Sorry, I was just reading a question that came in there. Ignore my question. My question was rubbish. Let's read this one. Did you assess the VAT impact on the management companies, especially those who were invoicing using TRN numbers? That was a question that's just come in there. So was there a VAT impact assessed on the management companies?
Yeah.
You guys probably didn't do any of that, did you? Because it's not your job. It was the FTA.
So
There is an impact.
Yeah.
I think the thought process, the impact was basically what we were talking about earlier. All the liability came onto us, all the cash flow came onto us. I don't know if the person that raised the question maybe missed that part of the conversation, but just to recap it, we had this conversation on the impact of the management companies and why the FTA looks for somebody of control, which is ultimately us in the new law. And it's up to us to sort of manage these cash flow, invoicing, administrative qualities.
Yeah, I mean, the main income of the management company, which is management fees, exempt now. I mean that's what before they were charging 5% on the and mainstream of the income is exempt now for the management company. So that's one of.
So that's a good point. I meant to pick up on that earlier. So I wasn't overly aware of that, which is embarrassing. But anyway, the management fees are exempt from VAT.
Yes.
Because you can't charge VAT on services you're doing yourself, right?
Yeah. Yes.
Fair enough. Good point. I'll make sure to write that down in my notebook next time. Is it there? There's only a couple of minutes left. I think we're all out of questions from the group. I don't know if anybody wants to say anything. Otherwise, we'll invite Mega back in. If she's there, she can hear me.
Yes.
Yeah.
Thank you.
So I think we went through the questions, Mega. So, and you go.
Definitely, and that was certainly an engaging and a very informative session, I must say. And I have a lot of takeaways as well from this session. So thank you so much. And I think on that note, we conclude the second edition of the Smart Built Environment Forum. But do note that all the sessions will be available on this platform till the end of the coming week. And then it will also be available on our YouTube channel as well. So I would like to take this opportunity to thank all the speakers who are here with us today and yesterday. The sessions, as I said, were extremely informative and engaging. And I hope that you as the audience have a lot of things to take away from it as well. It was interesting to really see the kind of synergy between the verticals of the built environment. And that is why we want to now continue such discussions on a more regional level. Hence, we've started a new chapter called the Synergy Series, where we will be taking the virtual platform to various parts of the region, starting with Qatar on October 19th. So do stay tuned for more details regarding this. But now I would like to thank our sponsors and partners, starting with our diamond sponsor, Nakil Community Management, our gold sponsor, Ijada and Serviu, our silver sponsor, Innova, Kaizen Asset Management Services, Netix Novus, Provis, and Socienta, and our knowledge partner, CBRE, and a technology partner, Facilio, and our strategic partner, JLL, and not to forget our innovation partner, Emerald Services, and our segment sponsor for this afternoon, Luxury Owners Association Management Services, and our supporting association, Middle East Facilities Management Association, and Clean Energy Business Council. We look forward to hosting you in the third edition. Until then, stay safe and happy weekend.
Thank you.
Thank you so much.
Thank you.
Thank you. Thank you.
Thanks, everybody. Thanks, guys.
Thank you very
Thanks.
much.
Bye-bye.
Thanks, everyone. Take care.
Bye.
Bye.
Bye.